Very good morning, everyone. Good day to you all. Charles here with FRGNT, Forex.com, FRGNT Mastery, and I would previously say FRGNT Daily Chart Analysis, but for a ban that I'm still going through on TradingView as a result of posting a link to FRGNTForex.com. I only have 23 days and 22 hours left in TradingView prison before I'm able to put content back onto that platform. So nevertheless, this is specifically for those of you viewing on YouTube. Welcome. Thank you very much for your subscription. Thank you indeed. I appreciate your presence. Now, this is going to be a video on how I use the DXY as a major confluence when trading those US dollar cross pairs such as GU, AU, EU, AU if I've not already said, and even US dollar CAD to a certain degree, in actual fact to a great degree. Now, what do we have in time and space here and now on the DXY? We can see that if you look to the bottom right hand chart, that's the daily time frame. I'm not too bothered about structure at all. I'm more bothered about how is price reacting in and around higher time frame order blocks, as well as the EMA, the 50 EMA on that particular time frame. Now, what we can see here is that as a result of the break below that 50 EMA, price came back in, retested it, and off to the downside price went. Now, price is now in and around the area of that daily 50 EMA. What am I going to expect? Well, first and foremost, I'm looking at previous history and understanding that price action has been respecting that daily 50 EMA. So I do indeed expect much of the same. So with that bias base in mind, just broad speaking, I'm expecting continued rejection from that higher time frame, 50 EMA. Now, what do I have to support that theory? Why can I come to that conclusion? Well, with that said, we also have a daily order block here highlighted in white. I appreciate it might not be too visible here, but from this, the low of this candle here, which you can see to the high, that's provided us the imbalance. And as you can see, as a result of that order block, price is stalling in and around that area, much what we would expect. Now, again, I had a question this morning in FRGNT Mastery just asking me of what do I think is going to be the case with the DXY? What's my overwhelming thought on it? What's my bias? Now, I broke that down pretty conclusively. However, as a result of not downloading that video, I wasn't able to share my thoughts. So here we go again. So using that daily time frame, let's refine that down to the 4 hour and really come to more of an idea of what's going on. So we understand that we are indeed operating within a daily higher time frame order block. Price is failing to break above. If I quickly revert back to that daily time frame, look at the importance. Gauge from this the importance. Price on the daily time frame is failing to break and close above that daily 50 MA. So what I showed this morning to one of the members in FRGNT Mastery was that, let's say for instance, we had a bullish candle and it closed not only above the daily 50 MA, but it also closed above the daily order block. Let's draw it like that for good example. So what would the thought process be at that point? Well, we came to the conclusion that if we had a bullish candle close above the daily order block and above the daily 50 MA, we would then be very clearly bullish as a result of saying, well, a point of interest in the market where we anticipated shorts from failed to happen. Instead, we had the opposite. So therefore, we'd expect that bullish pressure, a pullback back down into the daily 50 MA for continuation bullish outlook on the DXY. So it would be as simple as that, right? So let's convert the inverse and say, well, we don't have that. We have price respecting the order block. We have price respecting that daily 50 MA. What's the bias? So my bias was straight away overwhelmingly short bias from that. Nevertheless, we use all the information we have on all time frames to come up with more reasoning and more confluence to support our idea. Now, the 4 hour time frame, a time frame for me that I pay great deal attention to price action, structure, and of course how price is reacting in and around the 4 hour 50 EMA. So there's a bit of a confusing outlook on the 4 hour time frame simply because structure isn't as clear as I would like it to be to come up with a definitive presumption. Therefore, let's take a look into how I see it. So we have a clear low in the market here. Let's get rid of some illustrations for us all. We have a clear low in the market here. That's fair to say. So we then ask ourselves, well, where did that low come from? And based on just basic structure, low, lower high, lower low, lower high. After this low is created, it's our job then to really have a look and find about where that lower high is. Now, if we work our way up this structure point, we can see there is some 4-hour order blocks in and around this leg, in and around a higher time frame daily order block as well. Nevertheless, alerts going off. Price has come back into a daily order block on its way back up in the search for that overall search for the lower high for a potential lower low continuation. So if we start looking into price action now, we could say, well, expecting a low for a lower high for a potential lower low continuation. We didn't get it. What we had, in fact, is now price on the 4-hour time frame has created a high that's higher than this high. And the way I come to that conclusion is candle closures above a particular area. Now, if I use my red pen and circle this, you can quite clearly see that these candles on the 4-hour time frame closed above. So we now have the potential to look at this slightly differently. Let's say now, here is the newest high. This could well be the higher low for a potential higher high. Now, if that is the case, of course, we would then look for continued bullish pressure coming out of the DXY into some of these areas before potential roll down short. Nevertheless, look at it in a little more depth is what I would implore you to do, and seek to understand a trading range and seek to understand a little bit more. If a higher high is what we would be expecting from this area, we should have had it, right? Do we not already have a lot of confluence to support the fact that, well, actually, if we look a little bit more in depth, let's look about this. Here is a potential break in the 4-hour 50 EMA, creating what we would say is the first sign and the first low to be created. So now wouldn't this make sense and say, price has been respecting that 4-hour 50 EMA. We broke above, we made the high, potential higher low for a higher high. On the flip side, we had the first break below the 50 EMA, creating a new low in terms of fresh price action. Here's the low, potential lower high for what I now foresee as the lower low continuation. Again, go further, ask yourself, well, why does that make sense? Why would price look to reject this area? Well, for me, again, we're back in that the first instances. We are in the higher time frame, point of interest on the daily time frame. We have that daily 50 MA now coming down to keep price down below it. Of course, all this price action above is simply the wick above on that daily time frame. It's important how the daily candle closes in respect to that daily time frame. It's more than fine for price to trend above, so long as that daily 50 MA is respected. We are still bearish below that daily 50 MA. Now, the importance of what I see would be the overwhelming decision-making process is how price seeks to respect that 4-hour 50 MA. If price now breaks below that 4-hour 50 EMA a second time, for me, that is all the information you require to now have the alignment from the daily time frame as well as the 4-hour time frame, those real higher time frames that we look to seek to trade alongside or get the great bias from. That would be the icing on the cake, as I should say. So if we do now get a 4-hour candle closure below that 4-hour 50 MA, we're completely in alignment with the daily 50 MA as well, meaning that after this low, lower high, we'd have the lower low continuation after the break of this low. The 4-hour 50 MA would then be onside as price here would have closed below it. What would we then expect after the lower low? A lower high, wherein to particular, perhaps the 4-hour 50 MA, perhaps slightly higher, but the 4-hour 50 MA would make absolute sense for that lower high, lower low continuation. So that's the first element of why I came to that conclusion. But what I did say in FRGNT Marshall was, don't let that overwhelming short bias on the DXY scare you away from taking advantage of the bullish pressure that can also come out of the DXY. We are not long-term swing traders. We don't need to have the bias for the overall long-term direction of the index. It's an index, it's a confluence, but what I do know, and how from experience, I can trade the dollar in, I can trade any index using my method, using my interpretation of smart money concepts. So that's why we use the same principles here to come up with the diagnosis of where we believe price action could go. Now, with that said, here is how I explained in the community how you can use the confluence on the DXY, trading GU for good example. So with the understanding that we have the thought process that the DXY will react bearish long term, that does not mean you cannot take advantage of immediate bullish pressure coming out of the DXY. Let me show you how. So for good example, we'll stay on that, should we stay on the 4 hour? We'll have a look at the 4 hour time frame for now. So what do we have coming out on the 4 hour time frame? GU, I won't go into the full breakdown and analysis of why and how, but what you can see here is a 4 hour order block where we foresee price on GU could come up into before then giving us a reaction. Just a quick analysis of that is quite simple. We've got a low in the market, lower high, a lower low, and now looking for that lower high continuation. Just bigger picture type of stuff, right? We've now highlighted an order block, a 4 hour order block in line with structure first and foremost. Why does that make sense? It also aligns quite nicely with the 4 hour 50 MA, which we're already seeing on that 4 hour time frame. We are getting rejection because the 4 hour 50 MA is being respected. In an ideal scenario, let's say the next 4 hour candle, once this candle closes bearish below the 4 hour 50 MA, perhaps we can get a pop up into that area with the mindset still that we would still be looking to reject that 4 hour 50 MA to the downside. Let's quickly compare the DXY to see how that would make sense. Now, if we expect potentially GU to pop up into its 4 hour order block, what would that mean for the DXY? So if GU moves up, that would instigate DXY weakness. Where could that DXY weakness be? Let's have a look. Some areas on the chart. We have the 4 hour 50 MA there that of course the DXY is looking to reject, potentially to the upside. Again, although we foresaw overwhelming sell-off on the DXY long term, that does not mean we cannot take advantage of the strength that could still come out of the DXY short term. So again, the DXY could potentially react to the 4 hour 50 MA. And also, let's have a look for imbalance. We have a 4 hour order block here that is still yet to be mitigated. So again, if you take this and just eyeball it for what it is, price comes down into the 4 hour order block looking to reject the 4 hour 50 EMA. What's that going to look like on GU? Price would then push up into its 4 hour order block before we look for rejection for a turnaround short. Apologies, alerts going off. Now again, this also helps you with your management style, where because the thought process of the DXY being overwhelmingly short, you would have to look to be managing your trade position on GU slightly aggressive, if not close it out or just go to break even. Why? Well, because once price comes down into this 4 hour order block, and of course we would then be looking for DXY strength coming out of it to the upside, how short-lived could that strength be and where could that strength take you? So again, let's paint the picture. Let's say the 4 hour candle closes below that 4 hour 50 MA down here. The next 4 hour candle then will open and look to me as range. Where are we capped? We're capped by that 4 hour 50 MA before, let's say, then price has made that low. Here's a lower high for the low continuation on the DXY. with that said, then if you were to take a short position on the 4 on GU, again, it could be much of the same. Where would you have to manage your position? Of course, if the next 4-hour candle closes bullish above that 4-hour 50 EMA and your entry is up at the highs with a refined 15-minute order block, there would be your management criteria by the 4-hour 50 EMA. Despite them knowing that the DXY could look to go short long term, that is what will push you into managing your position on GU shorts, for good example. Again, here, a nice area where you could foresee some DXY strength coming into the market, potentially pushing you back up to that 4-hour 50 EMA. What would that mean with DXY strength, with dollar index strength? That would mean a potential short position coming in from GU again. So if the DXY is to push off from these areas potentially and roll back down to these shorts, then of course that would be you gaining your a better entry, for good example, on GU. Now the bullish instances that I'm talking about coming in from this area would be GU moving short. So again, back to GU moving short. Here is where if price stalls in and around these areas in line with the DXY and then price pushes in to, let's say, this 4-hour order block, looking for then dollar strength to come out of that 4-hour order block, there's your confluence. So when you're down here on the DXY, still have in the back of your mind that there is every opportunity to capitalize on some DXY strength, especially as you then look to compare it across your cross pairs. It's quite a wordy explanation. Hopefully you managed to hang on to what I was saying. There's definite gems in there. Once you're able to fully understand and use that DXY as a true confluence, aligning with smart money concepts in the way that you trade them, it just gives you, it's a free helping hand. If you can understand exactly what the DXY is doing, exactly what the DXY is showing you, and understand there is a difference between my long-term thought process. Of course, if I'm looking to hold a swing position on the DXY, it would most certainly be overwhelmingly short. But that does not mean, as an intraday trader, I cannot capitalize on short-term DXY strength. Now, all the very best, everyone. YouTube in particular, thank you very much for having me. I appreciate your time. I appreciate you taking a look at the videos that I'm posting. And as I can say, I hope you're getting all of the information out of it in the way that is intended. Thank you very much for your time. Take care. And that's Charles.